Hey guys, good morning. It's June 1st. Jason Jenkins. I'm doing an update coming out of the long Memorial Day weekend, and June's a pretty big turning point. We do updates, throughout the day and the week in our team and in traditional markets and what we trade. But I think the just like end of day closes matter, end of week closes matter, end of month closes matter. So also how you start the month is important. So anyway, just doing an update. I'm gonna hit on the majors, BTC and Ether quickly, and then I'll hit on four altcoins: uh, Link, Ripple, Doge, and Cardano. So on the future side, there's some trading that we did, a couple of signals we made over the weekend, but there's pretty good intermediate term chop. And so I highlighted the range on BTC, the regression channel, but we've been better buyers. Kind of just when you get below 2,300, there's been good spots to add. And then as you get up here in front of pi, which is 3,000, but there's this downward channel. So we just took some off here. The last move I made was in front of pretty much the high. We signaled sell. And this morning, we're just in the middle of that range. You can kind of see it. I drew it on Bitcoin. So the regression channels, because they're math based and they have to do a standard deviation and statistics, that's a key thing to help with probabilities. There's something called the 3 sigma rule you can look at. It actually talks about the probabilities and the standard deviations relating to when you get outside of 1, 2, 3 standard deviations. Something like 99% of all data sets fall within inside of 3 standard deviations. So that means that as applies to markets, you can draw something like this with a 2 standard deviation, and what you'll find is 3/4 or more of the trading falls inside of the range. And then so when you get towards what we call the wings, that's good edge to go the other way. So it's not like, oh, you're below this regression channel, you want to be short. No, this is a zone. So you want to be a buyer down here, get to the top of the range, you want to be a seller. All right. So last week was a good example of that. And then you can see now we're sitting right smack in the middle. So this is the intermediate term view. I like look at the market in terms of long-term, intermediate term, and then near term. So near term would be the day trade stuff. You have different edges there. I mean, there's 15-minute here. The pi line's done a pretty good job. I tend to trade more futures around like NASDAQ and bonds for as far as day trade stuff. But anyway, some of the high frequency guys, that's what they would be trading. I don't really see that great of edges. I mean, we failed here at the 30-minute pi. We failed at pi in the 200, basically right in front of it. So the near term range, I would call it 36,000. This is futures to 37.5. That's the inside range. And then again, the outside range we've talked about for a while is right in front of 30,000, and 40,000 has been the resistance, the right call on the upside. So no change there. And then big picture, I really kind of highlighted that over the weekend. I don't know how much I want to go into it. We're about day 2 or 3 inside of our 8.6 count on Bitcoin. So there's still room to kind of retest these lows at 30,000. Seems like, I think, is the highest probability. Ethereum, longer term, it's going to be very similar to the market. That range in front of 3,000 is a little bit of resistance. And again, down here is the bottom of the range. You can draw your same regression if you want. Also note that this daily cycle, guys, has room to roll over this week. So I think that's further evidence to put you for a retest of these lows, pivot lows. But Ethereum's still in a much more bullish posture. It's outperformed Bitcoin too this year, so I'm not surprised that on the pullback it's held better levels. And then we get into the alts. Cardano, very strong. You can also see it did not get back to its 200. It didn't get back to the pi line. It held these lows in front of the buck. So that would have been a great place to add. And then you're getting that same kind of ebb and flow that you are obviously with the rest of the market. Let me just draw this. So here's the lows, you bounce, make a lower high. Come back down, you bounce, lower high. Come back down, higher low, lower high. So you're getting this ebb and flow, right? the cyclical rhythm inside of really what is a consolidation in the market right now. Is that going to resolve itself to the downside? Maybe. Is it going to resolve itself to the upside? Maybe. You don't really have to know. We're just going to know how to play it if and when we start to see it. You break it down here, you got to be more defensive. We start to break some of this wedging. The market gets above the levels that we talked about, like 40,000. It starts putting in higher lows. Then maybe the momentous trade is back on. So that was kind of been our call, that we're still in a digestive period, maybe even all the way through June and even the whole summer. But just our point is, like, we like to trade it. So when you take on new highs, that gives you the opportunity to buy back. If you bought well, you got a chance to sell. And this is the difference between hodling and compounding your results. You're 20% move, 20% move, 20% move. So you keep a core long, but there's plenty of trading that you can do in the meantime to have some of that compound effect. And itch the trade, itch what it is that if you guys like to trade. I mean, there's plenty of moves in here to get involved. So that's what we like to do. Cardano, so still bullish, but let's hit on Doge. Quiet. This consolidation is technically a little bit different. It's still bullish. It's just a quieter. You can see that it's wedging, it's consolidating, it's kind of coiling like a spring. Which is fine. This is healthy digestion, both in terms of time and in terms of price. All right. So watch these levels here. That would be a clear breakout. We actually call that a swing line setup on the longer term horizons. And then we'll watch the rest of the market. If it resolves itself to the downside, you put in a fat bearish candle like this on a daily, weekly close, and there's room to come back down here on Doge, which you want to be a buyer down here. So it kind of depends on how you play it. That's what I'm watching. Ripple. Okay, it has more of this altcoin bearish complexity to it, where we talked about you get this real money candle, you have real sellers, you took out that support, this became resistance on the retest. So now, as opposed to some of those other coins who just look like that are still more bullish, making higher lows like this low and this low, now you're in a situation with Ripple where you're getting lower highs and you're starting to kind of roll this way. So XRP is definitely softer. The same applies though. This consolidation, I mean, you're a buyer here, those are good buys. You got a chance to sell in front of the bands here. But probably I'd say this one's a little bit more neutral. I'm a little bit more agnostic. Link. Nice hole of pie. This is why we use it. Some traders think they're going to get bearish because you're below the 200, even though it's rising. That's the wrong thing to do. It's where you get trapped. You want to be a buyer back down here. So if you bought well near a pie, you made some sales at the bands, it's technically, doesn't get better than that. Buyer here, seller here. And now again, coming off these lows, you're kind of towards the top of the range where you want to be booking some lightening up, and you're not going to have any real momentum again until you start to clear this area. So look for more chop. Hope that helps, guys. Have a great rest of your trading week, and see some of you maybe inside some of the chats.